Hello everybody, it's Nick here and I hope you had a great vacation and holidays. We are back. It's time to look at our charts again. I personally took a break of almost 3 weeks not looking at the charts at all. But we have volatility again after New Year's. Many pairs started to move again, so I have a few. I don't use and put them all right on my watch list day first or something like that, but I have chosen a few charts that are for sure worth trading, or at least taking a look at. Let me share those with you. The euro US dollar, for instance, is still very slow in terms of volatility. If you look at the weekly chart, we have a range here with a 1, 2, 3. Price looked like it wanted to move lower. Then during the week, it changed again back. So it moved down a couple of days, came all the way back up. Still not much going on here. You can draw resistance lines on the daily chart. You have some horizontal support and resistance in this area, but right now for swing traders, no real direction. Of course, like if you trade our system with a Renko bars or 5-minute charts, or you combine 1 hourly and 5-minute charts, okay, you will find day trading setups. But even here you can see we had a 1, 2, 3, no follow through, then price went back down, it spiked, went back up, trying to test resistance. So those are charts you want to avoid if you are more into swing trading, for instance. Okay. Yes, day trading wise, if there's volatility, if targets are big enough, there's always chances to trade. But right now, if the price doesn't get out of here, so breaking resistance or support, I won't touch this at all. Let's check some other pairs that look better. For instance, the Australian dollar, US dollar, we had a break. Price came out of this wedge at last here, and it's moving towards the previous lows. So what we want to see is we got already setups before the break, okay, aggressive setups in combination with day trading setups, okay, but right now price is still creating 1, 2, 3s with retracements only back to the 12 EMA, our volatility EMA. What we want to see is the price, now that we have a resistance line, coming back to this line if possible. If we get setups there, now it's Sunday, so on Monday if we see some setups, we can aggressively look for late entries and combine this with 5-minute charts only to target again the low from September, 3 and 4 down here. Okay, this is still like about 40-50 pips from where the price is right now. Now if we get the retracement earlier, it would be great. If not, it doesn't matter, we just wait for the next setup. Okay, just for swing traders, we still need the daily 1, 2, 3, but now that the price has the direction again, it already had the short direction, it was already short, right? So all the bounce trades in the direction of the main trend are still working. But what I'm saying is the price broke this trend line, which on the weekly is a 1, 2, 3, meaning that our main focus for now still short. Okay, USD yen. Look at the weekly chart. That was our only line. We had a wedge on the weekly chart. Price was ranging, support, resistance, and we even had some horizontal support down here, previous resistance. So price, ignoring the spikes, of course, price did break that and did not stay. It bounced a little bit on this area of support here, but then it decided to go down. So what we need for swing trading setups is again retracements back to this line, ideally to the 36. This will follow through. And for day traders and scalpers, still use the 4 hourly as your filter. The 36 is your guide. As long as the price is coming back to this area, bouncing on it, you can always focus on the shorts. Okay, you can also use the 1 hourly chart. You see false break, price moving down, creating lower points, so focus on shorts. Long-term targets, if you get the setups, we still have some support down here about 100 pips away, but long-term targets could be 109.50, 110, a round number here, and this for sure is about like 600 plus pips away. New Zealand dollar, Canadian dollar, we got this big daily retracement to the 36. If you draw a line, it looks like this, but this is not, it's too far from price away, so the only connections we can use are those two touches, 1, 2, and the extension close to the 36. So big daily 1, 2, 3. We need to see if the price it moves lower or spikes here. Then we have a big 1, 2, 3 bounce rates, 1, 2, 3s, lower time frames, and still long. Now on the 4-hourly chart, you'll see that volatility right now, day trading wise, is still short because we had 1, 2, 3s, 1, 2, 3s. The thing is, if the price moves lower, bounces on the 200, touches the 200, moves a little bit lower, spikes, whatever. If we then get our 1, 2, 3, we need to be careful because it's still looking short on the 4-hourly, but the daily, the higher time frame, gives us the long 1, 2, 3. Those are the, let's say, dangerous areas. You have to be careful. Lower time frame entries only for shorts if you get something here. Ideally, we would like to see this and then a break up in the end and setups on lower time frames down to the 1-hourly to take the longs. Yeah, if this will happen. If not, if price decides to break this line and you get setups below here, then of course we are short, and then we're going to target those previous highs here in combination with the extension of this line. Okay, Euro Australian dollar bounces on the 633, daily 1, 2, 3, it ranged, went down, spiked, went back up, so we had our first higher, really higher low after the confirmation here. Price now reached those areas of previous support and resistance, so it is an area, a kind of dangerous area, but it looks, it seems that we have a lot of volatility here. So still, of course, longs, ideally retracements. Now the price is gone, we need a 1, 2, 3, and ideally over that line here for now. Let's see what happens. GBP New Zealand dollar, big daily 1, 2, 3, price retraced back to the 36. Look at the weekly, we get a lower high, price moves lower, it's retracing now, but long-term targets still those lows here. So there's still enough room, but look at the daily chart. We need to see, will the price bounce, will it come back and test this line, because here it broke the 36 as well. Be careful, it's not that great on higher time frames, it's spiky also on the lower, but you know your targets, and as long as this is moving, you can still, you know, aggressively try. Euro CAD reaching the highs from August 2015. Big 1, 2, 3, not much volatility, but lately, last 3-4 days, it went up trying to reach the high. So you want to be careful here. If you are long, make sure you take profits. Not all of them, but at least a part of them. And if you see it's breaking, okay, you just stay in. You start drawing your support line. The 36 again, your guide. Just remember to follow the rules, the main rules, money management rules, and don't, if you're not sure, stay away. Okay, if there's something you don't like, look at a different pair. Don't take decisions if you are not sure, if you feel uncomfortable, or if you are afraid. Usually the decisions we make, if we fear or not sure, they are usually the wrong decisions. Okay, so don't do that. GBP, JPY, price breaking support, it's moving fast. Look at the weekly chart, reached already horizontal support down here, looks like it's just falling and moving lower. It took a while, but after the break it really went down fast, so this is what we are used to. This pair, usually GBP, JPY, had like really big moves in past, and it looks like it's again, it's a weekend. Don't pay attention to the spread. That it's volatile again, and as long as this is going down, we like the shorts. Now we need a filter. Your filter is the 1 hourly and 4 hourly chart. You see on the 4 hourly it only retraces to the 12. It's just too fast. If you switch to the 1 hourly, you see here you get your 36 EMA retracement, or almost. You can use those with filters like our 5-minute filters for entry. So what you need to do is just go back to the 4 hourly. It's easier to draw a line there. The 12 EMA is your volatility guide. So right now this one is in charge. You need the price to get back to this line on the 1 hourly or 4 hourly chart ideally, and then you look for new shorts if the price bounces again on the line or the 36, not before that. Okay, New Zealand dollar, yen. There we go. Weekly chart. Look at the monthly, just a quick look. This was up. Weekly now down with a huge 1 2 3. Then price retested the 36. It started to range in this area. Now we got a big break. So price is moving. We have volatility again. And look at that. The whole week it's just dropping. Good sign means volatility. Price came also out of the smaller wedge on the lower time frame, like on the daily. It's not really lower, but lower than the weekly. And now this is the only line you can draw on your 4 hourly chart, and because the price moved already, you want to see the price retracing back to here. If that happens, look for shorts again. Targets on this one, really the most touches down here, which could be another 150 pips. Long term, the lows from August, is that August 2015? Yes, the 633 with other words. Okay, those are only a few pairs that are volatile. There are more that look like that. Make sure you trade on pairs that are volatile. Don't trade on 10 pairs at the same time. You can just focus on a couple of pairs just to get the hang of it, to understand the behavior, follow the basic rules. As I said, don't make any decisions if you don't feel good, or if you do it out of fear. Usually wrong. And also, I was reading an article like a couple of days ago online that I really didn't like, because there were supposed to be this trader saying again, I'll trade without fear, I trade without emotion, I just click it, push a button, and then I'm somebody else. And now between us, I don't believe that stuff, because I'm trading for like 16 17 years almost, starting in 1999. Why do I not believe it? Because when I started, I read a lot of books about, you have to be ice cold and trade, and your heart must be strong and cold and no emotions. And I disagree with that 100%, because again, what we always say, you need the passion, this is emotion, right? You need really that love for trading. If you don't have it, okay, you won't be able to succeed long term. So if somebody says, I can trade without emotion, it's not true. My opinion. Now, maybe they try to say something else. Maybe they want to say, and they didn't get it right, that they control their emotion. That's something, okay, I agree 100%, because at that point when you trade, when you have to make big decisions with big lots, then you have to be able to control emotions. Say, okay, this is a good setup. That looks good. It's according to my plan. It's according to my rules. It's my mission. I will succeed my goals and accomplish my mission. The statement. Only if I follow the rules, right? So everything is according to that. And if that's okay and the setup is there, then I try to not think too much, and I'm not trying to think about what happens if things don't work out, because what then happens is very simple. If you apply money management, nothing happens. You just lose a trade and then you look for the next one. So this should be your filter to control the emotions, but you need the passion, because if the decision or your trading doesn't come from your heart, whatever you have in your mind is useless. Okay, so there must be a combination of both. Whatever, enough philosophy. I'll see you in the live room this week. Have a great year 2016. I wish you a lot of success, but also health, and we catch up very soon. Okay, see you. Bye.